So right now I want us to solve a question using dividend valuation method. So this is a question on the board, right? It says market price per share is 20 naira 50 kobo. X dividend just paid is 50 kobo or 0.50 naira, which is expected to remain constant. See, don't forget this is very important. Don't forget what I explained to you about SFM speed. So the first thing you do whenever you see any ICAN question, run down to the requirements. So here we are now told to now calculate the cost of capital. So the first thing you do is to run down to the requirements, because you can't just be reading question and all of that, right? So because you'll be given several questions, so you need to know whether you will be able to solve this question or not. So you can't just spend like 30 minutes reading question and realize that I don't even know portfolio theory. You just wasted 30 minutes of your time. So run that to the requirement first to know whether or not you can attempt this question. So calculate the cost of capital. The next thing is what? F, facts. So know those information. And how will this happen? Write out your formula. Your formula will be what will guide you. So you see now, what is the cost of capital? So how do you calculate cost of capital? K E is equal to dividend, right, over market value of equity, x div. So let's look at the question first. You say market price per share is this. So we know the value of our market by x div. They gave us next dividend just paid is this. So we know the value of this. So let's just put it out like that. Is 0.50 over 2.50, right? Which is expected to remain constant. That means there's no growth, right? Calculating the cost of capital. It's simple. This is just it. Where's my calculator? So it is 0.50 divided by 2.50. That is 0.2. 0.2, which is equal to 20%. 0 times 100. You will not see this one in ICAN question. ICAN will not ask you like this. So this is what ICAN does. ICAN will put information like this in a very broad question, right? And then now ask you what is the cost of capital, or maybe as you want to solve one question, maybe you want to find free cash flow to firm and you used to use KO and some other cost of equity on J and all of that. So this is where you're going to apply this thing. So that is why you have to know how to pick your fact well. That SFM, the F there, find out the facts, the information you're going to use. Then mastery, you will be very fast, you'll be more excellent, or you'll be excellent if you have practiced several questions. So again, don't ignore your pack, or don't completely focus on this channel. This is just an addition, or just like a support system for you. So read your study pack and practice questions. Very important. Practice questions. So this is the answer. Let's solve another question. All right, so I want to solve another question using dividend valuation method. So here is the question saying the shares of ZPLC are currently trading at 24.20 per share, and dividend of 4 naira per share was paid 1 year ago. That is the base dividend, and has been growing at 5%. That is the growth. The growth in dividend is expected to continue. The company is expected to pay the next dividend shortly. That will be the dividend for this year. Calculate the cost of equity. Don't forget what I mentioned to you. Anytime you see any ICAN question, the first thing to do is to run down to the requirements. Right now, it's saying calculate the cost of equity. Okay, cost of equity, interesting. So write out your formula and let your formula guide you. So what is cost of equity using dividend valuation method? So KE is equal to D base dividend 1 plus G all over market value of equity xdiv plus G when we have growth, and this is base dividend that has been paid. So let's find out those parameters, because The question says, or the question gave us the dividend for last year, right? So we need to determine the dividend for this year, and thank God we have growth that will make us determine the dividend for this year. Then when we get that dividend, we will remove it from the market value of equity. It's simple now. Let me repeat it again because I want you to get this. So I said there is this formula. Let your formula guide you, right? This is DO, and DO is the base dividend, the dividend that has been paid, right? And we have the growth here, right? And we have the market value, and this market value must be X div. That is, it must remove this dividend from it, right? The value of dividend must be removed from it, because if you are giving market value that is cum div, that means cumulative dividend. That means dividends inside. So you have to strip it out. You have to take it away. It's simple. So just like the question. So what is the value of dividend now? So dividend for this year. Let me just put it as D1, or this year dividend, something like that. So will be 4 bracket 1 plus G is what is 0.05, right? So that will be the value of dividend. And for the MV XD, for the XDiv will now be MV, market value of equity, cum div minus dividend, right? So let's punch our calculator. 1.0 0.05. This is 4.2. This is 4.2, and this will be 24.20 minus 4.20. This will be 20 naira. Can you see that now? Simple. So let's put this thing into our formula now. That will be D0. Where is it again? D0 is 4. You see the same thing. D0 is 4 into bracket 1 plus 0.05, right? All over. Or you just carry this one, because this is the value of dividend for the year. Or you just carry this one and say 4.2, because if you do this, it will give you this value you have gotten here, over MV. MV is 20 plus 0.05. This will be equal to 0.2 divided by 20 plus 0.05. This will be equal to 0.26, 0.26, which is the same thing as 26%. Very simple. Very simple. So let's solve another question again, because I want you to get this. So let's solve another question. So let's start another example, example 3. So here's the question saying EK PLC has 10 million 1 naira ordinary shares. Details of the company dividends per share over the most recent 4 years are as follows. So we have the details. The current market price is 2 naira 35 kobo. A dividend of 30 kobo per share is expected to be paid shortly. So required, estimate the growth rate in dividend. What is the company's cost of equity? So remember something. Anytime you want to attempt any ICAN question, remember that the first thing to do is to run down to the requirement first. I'm just reading this question because I'm teaching, right? So run down to the requirement first. So you are seeing this question now. What comes to mind? Which method will I use to solve this cost of equity question, or cost of equity question? Which method is most appropriate and suitable? Which method? Dividend valuation method is the most suitable. Why or how? The reason is because I told you that the question will guide you to know the best method or the most suitable approach to use. So you use dividend valuation method because you are giving information regarding dividends paid, or dividend about to be paid, dividend in the last few years, and all of that, right? So that's that. And the question says that we should calculate the growth rate. And don't forget, we have 2 methods or 2 approaches in which we determine the value of growth, or the growth rate. So based on this question, which method are we going to use? Hmm? Hmm? Historical method. Historical method, that's what we're going to use. Why? Because of the information. Don't forget, the question will always guide you. The information given will always guide you. So you should be smart enough to know how to use the information that you are given. So the information given now, we're given the history or the past dividend per share records from 2019 to 2022, right? Even though 2022 is an estimate, right? So it is historical method we're going to use. So don't forget, the next thing for you to do when you are writing is to state your formula. Write your formula and let your formula guide you. Let's go right into the class. So KE is equal to D plus D into bracket 1 plus G all over market value X div, very important, plus G. All right. So, but here we don't know the value of G. We are not given G. So how do we get G? G is equal to, and we are using historical method. It's going to be newest over oldest div minus 1, right? So what is the number of years? You might make a mistake here, or you might think the number of years we have here is 4 years. No, it's actually 3 years. How? See, let's say 2019, 2020, 2021, and 2022. 2022 is an estimate. It's an estimate, so it has not been ascertained yet. So it's an estimate. Even beyond that, another reason for that is also because when you're calculating growth, you compare 1 year to another year. So from 2019 to 2020, that's 1 year. That is 1 year. 2020 to 2021 and 2021 to 2022. But basically, it's actually 3 years. And the reason for that is because 2022 is an estimate. Because it's as though we are still in 2022. So it's an estimate, right? So it's 3 years actually. 3, we're just giving information for 4 years. 3 over roots. Newest dividend is 30. The estimate. Oldest is 26 minus 1. What do we get if you punch this into your calculator? This is 0.0488, just like this is 0.49 or 0.049, which is like 4.12. Yeah, this is like times 100, or just press times 100 in your this thing. 4.9, 4.9%. So 4.9%, that is our growth. Then let's put this growth into our formula. Before that, don't forget this market value must be X div, right? And the one that we have, the one that we have currently is actually cum div. It's actually cum div, so we have to remove the dividend from it. Yes, the one we have currently is actually cum div because they are yet to remove the dividend from it. So that means the current market value price has dividend inside, because they said, the question says a dividend of 30 kobo per share is expected to be paid shortly. That means dividend has not been paid. That dividend is still inside the MPS, market per share. So you have to remove it. I want to use one English, expunged. Oh my days, don't worry, it's an inner joke. Yeah. um so currently it is 20 watts, 2.35 minus 0.30. So what is the answer? This should be 2.05 now. Yeah, this should be 2.05. So let's put the figures and just put inside the formula. So dividend for that year is 0.30 bracket 1 plus what is growth? 0.049 all over 2.05 plus 0.049. So let's press this into a calculator. You must also be very fast using your calculator. That is part of the speed that we're talking about. 0.3 is because I'm teaching, that's why no, I'm holding close together, so I don't want my iPad to drop. 49. This is 0.0. The answer is 0.0. No, 0.20. Let me drop this thing. 0.2025, which is the same thing as 20.25%. So this is the answer. 20.25%. Simple, right? Simple. Very simple. Let's open another question. Are you ready? So we have another question here that says if Fellomo PLC maintains a ratio of retained earnings to dividend of 1:3. Its summarized income statement for the year ended 31st December was as follows. So we have the details here. So the follows were extracted from the statement of financial position for the last 2 years. So we have that there as well. So what is the dividend growth rate per annum computed via the earnings retention model? So here we are looking for the growth rate via the earnings retention model. That is the growth model, because when we talk about retention, where do we have retention um in our approaches to determining the value of growth or the growth rate? Gordon's growth model, because Gordon's growth model is saying G is equal to R times B, right? Where R is ROI, which is profit after tax over opening net assets, right? And B is equal to EPS minus dividend over EPS. And I've told you, or we can even say, or is it showing? Or PAT, profit after tax, minus dividend over PAT. And I've told you before, the reason for that, profit after tax. So we want to pay dividends to our shareholders, so we pay them. So the amount we have remaining is called retained earnings. So we can also say retained earnings over PAT, profit after tax. Simple. So let's fetch out this information from this question, right? So again, run out to the requirement. We know the requirement to find the growth rate. Let your formula guide you. We've written our formula, and the next thing is to now impute the figures or our facts into the formula. So let's fetch out those variables, right? So for R now, how do we get R? R, as I've said, is PAT over opening NARB. So what is our profit after tax? So our profit after tax is 800 all over. What is our opening net assets? Opening net asset is 9,000. So we have our answer. What is B? B is profit after tax minus dividend, right? Which is the same thing as retained earnings. So we already have retained earnings there already. So write retained earnings all over. What is part? The profit after tax is 800. Can we see that? Simple. So let's punch our calculator. Let me drop this thing. So 800 divided by 9,000. So we have 0.088. And this 200 divided by 800. We have 0.25. So and G is equal to R times B, then 0.088 8 times 0.25 is equal to 0.022, which is the same thing as 2 point cos times 100, 2.2%. That is our answer. Can you see? Simple. So simple. So simple. So should we try another question again? Or we should move to KPM approach? Let me know in the comment section if you want me to solve more other questions. Don't forget again to like, to subscribe, and to share with every other person. Again, the reason we are doing this is just to help you understand some of these concepts, the rationale behind some of these workings. Because if you are reading it in your ICAN study text, you may not really get it, right? And also to inspire you to actually practice, right? So it's not a class where you abandon your ICAN study pack or any materials you're studying. And please ensure that you are practicing and you are practicing. And if you have any questions, to do it to let me know. Or if you have any topic you want me to also start solving right now, let me know. Or ask any question in the comment section. I hope you really enjoy the class. Please let me know. Let me know if you really enjoy this class. Then that will definitely maybe motivate me to want to do much more. All right, see you in the next class. Thank you.